Righty ho, everyone, and welcome aboard. Thank you for joining me for today's edition of Trading Buddies. As we get near to Christmas, the second last Trading Buddies. And I've got to say, I'm looking forward to a break. That'll be nice. Ooh, there's a lot going on here. My apologies. Okay, let's get underway, and I will show you a very important thing, what I think is a very important thing anyway. I don't see why I'm getting that message. Okay. You should be able to see now, guys, my screen, which has Forex Factory calendar on it. And the reason that's there is because we have a very important week in the markets. You will note with interest that we have four central banks delivering their statements this week. The Australians tomorrow, the Canadians on Thursday. Not much happening on Wednesday. We might get a bit of a breather there. We've also got inflation data out of the States on Thursday. This is for my time, by the way. As I said, the Canadian or the Bank of Canada will release their rate statement on Thursday, my time, as will the Swissy, the Swiss National Bank. And of course, the biggest one, I suppose, of the week will be the ECB and their refinancing or interest rates, if you like. So a very, very big week for central banks, and therefore one would think for currencies as well. Right, what's the aim of today? Well, it was going to be to place an order long euro dollar because this candle was going south in a decent setup for me, which would have been a false break. This is euro dollar 30-minute chart, which would have been a false break of not only this support trade line, but of course the daily pivot as well, took off before acceptances, as they say in the racing game. So it looks like our edge may be gone. Not necessarily. We might get a pullback here and still be able to trade that. I'll keep you posted on that. But the main game, of course, is trading the pound and gold on the 1-minute charts. Let me get rid of that. Hang on 2 secs. And bring gold up. I've got an order short euro yen. I'll share that with you as well. Okay, there we go. The 1-minute charts are up. So pound and gold versus the US dollar is what we're trading. And we're looking to scalp these for a very short period of time. The criteria that must be met before I do that is a candle must hit the red line, and then subsequent candles, two of them, must close below the black line. Very, very simple. This is a Bollinger Band, and so is this. They're both 20-period Bollinger Bands. One has a standard deviation of 2, which is what the black one is, and the other has a standard deviation of 3, which is what the red one is. So once again, what I'm looking for is price to hit the red, then close below, in this case below, the black twice, not once, but twice. In other words, I want confirmation that price is actually going to go down. If it was reversed and we were down this area, we would look for exactly the same thing. So a candle to touch, preferably close on, I like it to close on the red line, and then two candles closing above the black. Very, very simple process. Well, we're not near there at the moment, but this can change very quickly, of course, on a 1-minute chart. This is close, but no cigar at this point, so we're just waiting on price to do exactly that. As we get very, very close, let me put it that way, to London Open, we will look to find a little bit of volatility coming into the market and therefore look to scalp some pips out of it. That's the whole idea. Righto, market's open. Let me see how that euro setup finished up. Finished up as not a setup. As I said, I was willing to trade it long above this, well, not above this bar, above the bar that just closed, but the bar that just closed was down here at the time that I was looking at the setup. It's now closed above here. What I probably, no, I don't like it now. at all. And the reason I don't like it is because of that level. So if I entered here as a result of a pullback to the trade line, I'll be trading straight into that resistance level. It's something I don't seek to do. So we won't be doing that. Pardon me. Back to the 1 minute charts, and I'll just keep coming back to those every minute or so, just to make sure that we haven't got a setup. In the meantime, I'm going to share with you, it's only me today, by the way. Ash and George are both in Singapore doing our platinum membership events or mentorship events. I'll be joining them from tomorrow, Wednesday, Thursday, and Friday, and that goes the whole week. It's I think it's about 11 hours a day. I'm not involved with the whole lot. I haven't got 11 hours a day to spend, unfortunately, which is why I'm actually not going to Singapore per se. I'll be doing that online, as will a lot of the other traders. Okay. So it doesn't really matter what these candles look like, guys. Nice reversal bar there, but that doesn't interest us. We're only interested in the guidelines, which are the top and the bottom red lines. Until we hit those, we're not interested in trading. Righto, I'm going to share with you that euro yen trade or order that I've got in the market. It is on a weekly chart, and I'm going short euro yen. Now, those of you who trade my core strategy, the slingshot, will recognize that we have a nice little support trade line here. This is going to be a breakout trade, right? It's not a continuation trade or reversal trade. It is a breakout trade, although we are still trading counter the trend, which of course is extremely bullish. So care must be taken in that regard. There is, however, on the monthly chart, a massive bearish engulfing bar, followed by, well, I guess another bearish engulfing bar. It's not quite, is it? But it's there. But more importantly, after a rally, and pardon me, this could well be the beginning of a reversal. May not, but it could well be. That's why I want to be on it. There is the look of a head and shoulders about this, and if that's the case, the neckline is pretty much through here. So we're looking to break that neckline. The correct way to play this in my world as a reversal is to wait for that neckline to break and be retested. I'm trying to get ahead of that. And on the weekly chart, which is where we're trading this, that slingshot setup is there. I've got a low test bar here, and I've got a second low test bar on that trade line. On euro yen, it's one of my favorite plays, to be honest. The one thing I can't tell you is whether the euro has got the intestinal fortitude, if I can put it that way, to remain bullish. That's my one concern here. Not concerned with the euro. I think the euros are still under pressure, but the yen is the problem child here. So if you wanted to follow the trade, I'm going to enter here. Again, it's a breakout trade. It's counter trend, so you need to take that into consideration if you are going to follow it. The entry is at 156.15, which is bang underneath that bar or candle. Stop loss is 350 pips above that, which is covering the candle. You could be a little bit more conservative and put your stop loss above the monthly pivot. I've just had a red line hit, have I? On pound, but it's gone above, so no need for alert. Yes, you could be a little bit more conservative and put your stop loss above the monthly pivot. You could even put your stop loss above the swing. And if you were prepared to do that, it still makes sense, because if this does reverse and goes to the next support level, which is probably here, you've probably still got a one-to-one, and then you've got plenty of room left anyway. So, if you want to be conservative, then I would applaud that. Haven't got a problem with it at all. Back to the levels. 156.15. Stop loss is at 159.65. And my first take profit will be at 340 pips, so just on or just under one-to-one, at which time I will close 1/3 of the position, and that level is 152.75. It's somewhere between the low here and the high here, so it's kind of in no man's land. But I think if we do break out here, we're going to see a fair bit of downside. So not too concerned where that is at this point. Righto, back to the minute charts, and I will show you an interesting scenario because on the pound on my other broker, we have well and truly hit uh, hmm, somewhat disturbing. Don't know what's going on, guys. I've got the broker, which is FXCM, showing me a massive spike on this. Current price is 127.63. That's correct, but it's I know why. I know why it reset itself. My apologies. So there is no high here. On gold, let me get rid of that one. Still waiting again. London Open hasn't produced anything at all at this point in time. So we're a little bit devoid of not ideas, but setups at the moment. Okay, we'll push on. Got some analysis to share with you for the week ahead. Now, Monday being the beginning of the week, obviously, what I'm looking for is a directional bias and probably not looking to trade at this point, but looking for a directional bias that may set something up for us to trade during the week. As I said, massive week ahead, given that we've got four central bankers giving us their rate statements. So you've got to take that into consideration as well. Let's go back to not the Forex factory, but to this chart, which is the indexes, the currency indexes. This is the dollar index, and it has fulfilled our rectangle or our box range, if you like, which has um, put price back in a negative direction, if you were, yeah, I suppose, a bearish scenario. But that said, we are at a support level still. You can see last week's bar there was a little indifferent, if you like. High test bar didn't really give us a lower high, which is what I like to see to confirm that this is going down. But what I do see is an indecisive bar last week, which is interesting given that we had the non-farm payroll announcement, which was pretty good, I think. Although it was mixed given the wages and the unemployment rate, which I think went up. So it's a little bit of a mixed bag, which is why you're seeing that candle there on the dollar index. So I'm inconclusive here as to whether this now breaks this line and heads down towards the bottom of our rectangle, or whether it bounces off this and gives us a lower high or even a new high. Those things are all in the mix. Aussie dollar, oh sorry, the Aussie index. Last week broke through this support area and really does look to be on its way down to the bottom of this rectangle. So I'm bearish the Aussie. Canadian dollar, no setups. I'm still watching the minute charts, guys. Canadian dollar looks to be in all sorts as it just continues to plummet. One day, or sorry, 1 week in the last 2, 4, 6, 8, 10, or let's say two, but actually got a bit of green about them in the last dozen weeks or so. That's not a good sign. But that said, you would think that it'd cool off at some stage. By the look of last week's bar, which is this one, that's not anytime soon. So I'd have to be bearish still the Canadian dollar. British pound, not dissimilar to the Aussie in some ways, but we have not the Aussie, the dollar in some ways because we got that indecisive bar last week. But what we have got is price closing twice above this horizontal level. Okay, it's not the most significant horizontal level that I've ever seen, I must say, but it has done that twice. Yes, it came off the high last week, but then everything came off the high last week, as it would appear. Some sort of a look of a head and shoulders sitting here. Was that it there, or is this it now? Good question. At support and holding above support at the moment. So big confluence area there on the pound. I'm a little bit on the bullish side for the pound. Not overcommitted to that, but it does look to be above support. Swiss franc, wow, what a ride this is giving everybody, including myself. I've got two positions on the Swissy. One CAD Swiss short, which is going well. The other pound Swiss long, which is just hovering underneath my entry, which is long. This is impossible to read, frankly. We are straddling support. We are straddling resistance. We have a massive high test bar for the second week out of the last five. Rejection of the lows. How do I judge this? I've got absolutely no idea where this is going, to be fair. Do I say, okay, the support is holding, or do I say the resistance is, I don't know if it's holding or not. So yeah, indecisive, completely indecisive on the Swissy. The Kiwi looks, for all intents and purposes, although it is at a support level, as though it wants to reject this trade line and has closed underneath this level here as well. So it looks to be on its way south to me. Got to be bearish from my point of view on the Kiwi. The yen, my goodness gracious me, what do we do with the yen? Of all the currencies, I think this is this week's candle now. No, it's not. Still last week. So indecisive bar there last week, but the week before is clearly a bullish indicator. And not only was it bullish, it was massively breaking this former support level, which of course should have provided resistance, didn't. This in some regards, I can't really call it an inside bar, although the body's inside that candle. That would tend to suggest that price is still going high, maybe to the top of that range again. So I'm finding it difficult technically not to be bullish the yen. I'm finding it difficult fundamentally. Well, I suppose they're talking rate increases whilst everyone else is talking rate cut. So on that basis, I guess you could say, okay, yes, the yen should appreciate. I don't know, guys. Every time this rallies, it disappoints. Although I must say, the last significant rally, which is in this vicinity, was far more significant than what we've seen already. I'm prepared to give it a chance again. Tell you what, I keep getting burnt against the yen, but this time is different, right? The most quoted words in trading history, which are always false. It's not different. What is different is the circumstance. The setup may not be different, but the circumstance is. So I'm giving it another chance. Euro yen short. Speaking of the euro, here it is. Yeah, look, two bullish bars here have failed really to create a new high after it has now created a support trend line. So it's created its own support, this bar here. Massively bearish, apart from one little indecisive bar there as we came through that level, decisively through their gap down, big bar, two inside, well, inside those two, I suppose. Those two bars are not giving it to me as far as buying the euro is concerned. So still bearish the euro, which adds up, as I said, to euro versus the yen short. Let's go back to our minute charts and see what's going on. Not a whole lot. Did I say it was going to get volatile when when London opened? Look at gold. This is a minute chart. It's doing absolutely nothing, which is kind of disappointing because it's a nice conveyance to trade when the market is moving. I can't see a setup anytime soon, but that can change very, very quickly. So on with the job. My technical analysis begins with those charts that I just showed you, but continues in 3 or 4 different phases. Next thing I look at is something that I call reversal bars. Well, I call them game changer bars. They are reversal bars. In fact, the key reversal bars. Let me bring up, if I can find it. That'll do. I'll have to put my market scanner on here so that I've got access to everything with one click. Ready, set, go. There we go. So we start with, and I'm only looking at the weekly charts here, and I'm looking for what I just described as key reversal bars. Key reversal bar, for those of you who don't know what it is a bar or candle, sorry, in this case, we're using candles. Few examples. This one here is a key reversal bar because its high is higher than the previous, in this case, week, and it closed on or near its low. It's as simple as that. That's what the candle is. It's a key reversal candle. I call it a game changer bar. The reason I call it a game changer bar is because I want to know that it's actually going to change what was occurring. So what was occurring here is a rally. If I get a key reversal bar that is bearish, then I want it to change the game, hence the name. And this one did, as you can see. I probably wouldn't have traded that given we're in such a bullish market, but if it agreed with the overall momentum or trend, I call it the big boss, then by all means I can trade that. The big boss here for mine is a little bit confusing, but I think since we got this double top and continued to get these things, key reversal bar, after a rally, market sold off, market rallied, key reversal bar, market sold off, market rallied, key reversal bar, market sold off. You can see why I'd be keen to continue in that vein, I do believe. I haven't got one here on the monthly chart, but I do have a decent rally, no question about that. So the weekly is giving me on Aussie versus the CAD, which is not a game changer bar, nothing. The reason it's not giving me a game changer bar is the high here is not higher than the previous, and the low here is lower than the previous, but it hasn't closed on or near its high. I hope that's not too confusing for those of you who don't know what I'm talking about. Please ask questions if that is indeed the case. I haven't even got chat box open, so if you are asking questions, nobody is, which is good. Good that haven't missed anything. But if you want to ask questions, please feel free to do so. I'm here to help or here to share, not here to dictate to you. So, given that explanation, here are the game changer bars for the week. Swissy versus the yen is the first up, and it's suggesting that we buy. Now, this doesn't look really good as far as a game changer bar is concerned. Yes, the low is lower than the previous, and it has closed near its high. Question that I've got for myself is how close to the high do I need to be? The rule I use is 1/3 of the candle. So in other words, in this case, we've got from close to high, 105 pips, which means I need to have 210 pips down here. So 2/3 of the candle, which I've got easily. Therefore, it does qualify. Does it qualify as far as the main game is concerned, which is the big boss? The big boss is undeniably bullish. That said, we do have a bearish engulfing bar here and a lower high. So it makes it just that little bit more tricky. And what therefore I would do is say, monthly pivot in the way, risky, potential lower high, risky. I don't want to buy it. Move on. Euro yen is suggesting that we buy here. Now, as you know, I've got a short order in the market for this pair, not a long order. And the reason for that is because fundamentals combined here are suggesting that the Bank of Japan are about to raise interest rates again, and every other central bank is looking to lower interest rates, the ECB included. And the ECB meet on Thursday, and we should see a further reduction in interest rates. We should also see, if not a whole, certainly won't be rising them. We should also see the next meeting of the Bank of Japan, as is now the flavor, raise interest rates. So on that basis, as well as that big bearish move that we've got, small retracement back to about 50%, I suppose. I'm looking for this to break out. So I'm not going to trade it long as the game changer would suggest. But the game changer, as I said, is in confluence or is in agreement with the main theme, which is bullish. So I'm going against it. Euro versus the Kiwi. Actually, if you're in the show last week, I traded this on the weekly chart and got absolutely poleaxed by that bar there. Will that continue is the question, and that's what the game changer bar, which is that candle, is suggesting. As far as the big boss is concerned, a little bit difficult, this one. It's very, very rangy. I'm not prepared to say that there is a big boss here. I think it's just 6 of one, half a dozen the other. So in that vein, I would say it's possible. There's still nothing on the minute charts, by the way, guys. I'm monitoring. It's entirely possible that this goes with it. It's entirely possible that it goes against it. Size of the bar, proximity to the resistance, not prepared to trade it. Pound versus the Swissy, already long this. Was this a weekly trade last week? Yes, it was. Was it? Or did I pick this up on the daily? Can't quite remember, but I'm in it long anyway, and a little bit out of the money because I'm long here. Oh no, we traded this. That's of course that's last week, isn't it? I'm with it. We traded this bar here, so just getting near my entry now from last week. This is suggesting that we traded in the opposite direction, traded short, right? Given that high is higher than the previous and it's closed near its low. Quite the opposite of the week before, which agreed with the week before that, which disagreed, blah, 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 blah. So this is all over the shop. Why am I happy to keep it in the market? Well, let's go back to the currency indexes that I'd shared with you about 10 minutes ago. I was bullish the pound and not sure about the Swissy, but potentially bearish the Swissy. So why wouldn't I keep that in the market is the question. No reason. So I am keeping it in the market. And at this point in time, it looks to be a bullish start to the week for pound versus the Swissy, despite the fact that we have a game changer bar to the downside, which does agree, I do believe, with the big boss, which is telling us we're still in a downtrend. All of that said, there is a big reversal bar here. There's also what I consider to be a strong support level, off which we have already come with this reversal bar. So I think buying here is the right way. Yes, it's against the trend, absolutely against the trend. But when I'm looking to trade game changer bars or weekly charts, I'm looking for big moves. I'm not looking to go to here. I'm looking to go up to here. So that's why I'm willing to take these on small risk. You just don't put too much in the market because you'll be able to pick up second and third and fourth and fifth entries if it does go as a reversal. So that's the whole thing with game changer bars. They can put you in the market for quite a long time. Pound versus the Swissy is a possibility for that to happen. Certainly no probability, but possibility, yes. Pound versus the yen. Also suggesting that we buy here, coming off a support trend line, potentially continuation of this sequence, which is lower low, lower high. Problem is, it hasn't cleared that trade line or trend line, so I don't want to be going short. I agree, therefore, with the game changer bar, which of course agrees with the overall trend, which is long. So the only issue I have here is the monthly pivot dead ahead. So you're trading straight into resistance, which is something I don't like to do. Yes, the setup's there, but so is the issue or the problem, if you like. There's only a couple more, two, in fact, Kiwi versus the Swissy, suggesting that we sell this off because we've got a key reversal bar, game changer bar in my world, which has got a high higher than the previous and closed near its low. So far, had you taken that position, you would be in strife. I would not take that position, and the reason I wouldn't take that position is because you're trading straight into that level and not quite there yet. The thing is with game changer bars, right, and key reversal bars, they're giving me a directional bias, as I said from the start. So if I were to get a setup later in the week, say on the daily chart, I don't know how, it might come as a false break of a resistance trend line, for instance, maybe even that one, which would fulfill a couple of criteria. If price were to get back up to here and then find it difficult to get above this high, come back underneath here, confluence area with the monthly pivot, and retest it, then I can trade it because I can get some money in the bank before I hit that support level. If I took it on the weekly and the support level actually did support price, I would be looking at a drawdown, which is currently what's happening, right? Had I taken that trade, that would be the issue. Eileen, sorry I arrived late. Did you explain what is a game changer bar earlier? If you did, I could just... look, I did, but it's very, very simple, Eileen, so I have no problem in doing it again. A game changer bar is, if you want to look up on, pardon me, or Google it, is a key reversal bar. Now, my interpretation of a key reversal bar is potentially different to what the textbook might say. But in my world, a key reversal bar is, or candle, I call it a bar, but obviously we're using candles here, is a candle whose high, if you're going short, right, whose high is higher than the previous. Now, I only use these on weekly and daily charts because I haven't traded them on 4-hour charts or less. So daily and weekly charts is where I look for them. High is higher than the previous week, closed on or near its low. So in this case, that would fulfill that criteria. Near its low in my world is 1/3 of the candle. So as long as we're within 1/3 of the low in regard to the whole candle, we're good to go. So the third here is 27 pips, let's say. That means that 2/3 has to be greater than 54, right? And in this case, well above that. So it has closed in the bottom third of the candle. That's what I'm looking for. So that's as simple as that. A key reversal bar in the opposite direction is one of those. It's got a low lower than the previous, closed on or near its high, on or near being the crucial. And what they're good at doing is they're good at picking decent moves. In this case, what's this Kiwi Swissy? What's it telling us to do? I can't remember. Short? Yes, short, because this one's higher than here, closed on near its low. I have to have another reason to enter that trade. The most basic reason would be that that candle has to agree with what the major theme of the market is. That might be the trend. It might be, a big resistance area. It might be a big support area, but it has to be in agreement with what the main theme of this chart is. Main theme of this chart, in my interpretation, is bearish, right? Therefore, the game changer bar, which is telling us to go short, is perfectly valid. The issue I have is that we're also trading straight into support, which is this level here. But again, I'm looking for a directional bias only, not looking necessarily to enter the market. So now I see this level, I won't enter on the weekly, but I will look for something that gives me an entry on a smaller time frame that allows me to trade into that area, but get some profit in the bank and make myself safe before I do so. So I hope that clears up what a game changer bar is. They're very, very effective. We did have, I'll point it out to you. There was no trade, guys, but I'll point this out to you. On the minute charts on gold, we did have a setup. I'm just going to find gold now. Go away. There it is. So here we had the red. We've hit the red, which is the, you're welcome, Eileen, which is the 3 standard deviation line on a 20 period Bollinger Band, closed above the black, but then we didn't get the second. And this is why I wait for the second close above the black, right? Had I traded the first close above the black, bang, I'm out. So I wait for the second close above the black. Now here, we did have a setup. This one touched the red, closed above the black for the first time, then closed above the black for the second time. Where do you enter is the next question, right? You enter above the second close bar or the second close candle. So your entry would have been here and you wouldn't have been entered into the market. I would have cancelled that by now. So I wouldn't hold all of that time. So that order would now be cancelled. The one thing I need to check is, did it put in a new low? And yes, it did. So as soon as it's put in a new low, under the current rules that I'm trading this, I would cancel the order anyway. But I'm well and truly closed the order before now, and will cancel the order well and truly before that anyway. I only like to wait 3 or 4 candles. I haven't really put a parameter on that yet. In other words, I'm still testing that as to how many candles I should allow before I cancel the order. So I'm really indecisive on that at the moment, but 3 or 4 is plenty. This is too many because things have changed. Now, it may be that that still triggers and goes 100 miles. So be it. I'll take note of that. And if it happens on a regular occasion, then very clearly I will change my my rules. But at the moment, if I get a low subsequent to the low that created the reversal, then I will close the order. So still no setups that we can add to the one that's already there. We will continue on. So the game changer bars I finished with, oh no, there was one more, Kiwi versus the dollar. So again, we go back to the weekly chart, which is where I'm waiting for a directional bias. It turned up in the form of a game changer bar. I'll go a bit tighter so that you can recognize that. This is a tricky one. This is what I call a game changer plus bar. I hope I'm not confusing you too much. It's really a far simpler thing than it sounds. So the game changer bar is actually here, which was 2 weeks ago. So we've got the low, lower than the previous, closed on or near its high, right? So that's a game changer bar, key reversal bar. Then we've got an inside bar. Now, inside bars in my world have a tendency to go in the direction of the most recent momentum. So in this case, I'm looking for that to go long. Hasn't done that yet, of course, but that is what I call a game changer plus bar. Entry would be silly in more ways than one, in my opinion, to put there, because you've got the monthly pivot and you've got natural resistance by the previous week. So although the rule does say enter above, or my rule does say enter above the game changer plus bar, so the second bar, the inside bar, I wouldn't be doing that on this occasion because you've got the monthly pivot right there and you're trading straight into the high. If the inside bar was down here somewhere, so in other words, if the market had gapped down and I could get some profit in the bank before the monthly pivot and the high, then different story. I would trade the candle. But in this case, the game changer plus is not a good entry. It would have to be above there. So in other words, play the game changer of the previous week. But that said, you've then still got to go back and check, is it in agreement with the big boss? Now here you've got a bit of a dilemma. You can either use discretion or you can move on. The reason I say use discretion is this is clearly in a downtrend, right? Has been for yonks. But you've got this massive double bottom sitting here. Since we got that double bottom, we've had, I suppose you could call that a higher high, but really we've just gone into range, right? There's absolutely nothing exciting going on here, except that you do have a higher low, which has not been broken. That range, therefore, becomes interesting to me. I might as well use this one since it's there. So there's your box range, right? Now, when I see something like that, I get quite interested. And the reason I get interested is because ranges can go on for a long, long time. And when they do, they give us massive opportunities to trade. This is a monthly chart. So we've been in this range potentially since, well, let's say September 2023. So more than a year we've been in this range. Go to the weekly chart. You can see that it's so consistent going from the top to the bottom, bottom to top, top to bottom, and eventually to the top, now down to the bottom. Why would that not continue? Good question, right? If it does, it should give us a signal at some stage that that is to continue. Now, in my world, that generally occurs off the top as a lower high. What's that? Lower high goes to the bottom, almost to the bottom. We'll call it the bottom. We'll lift the rate. I can cheat, right? Because I've seen it already happened. But let's say that's the bottom. And in reality, it did really start there. You've got more touches on that. So it really is the bottom at the end of the day. The top's a little bit wonky as well. But once you've gone from the bottom, you're looking for a higher low. That's not a great one because we didn't get a lot of retracement before it, but it is a higher low. Enter there, trade it up to the top, lower high, enter there, trade it down to the bottom, etc., etc. I'm on a weekly chart. What do you think that looks like on a daily chart? How many times has it done this? It's a lot easier to trade because you've got double bottom, higher low, double bottom, higher low. That one would have been a bit tough, but you get the drift, right? So when I see, back to my point, when I see no setups on the minute chart yet, when I see a range like that on the weekly or the monthly, I kind of get a little bit interested. So right now, this is showing me the potential for this to be a false break of that support level. So the daily chart is going to be where I'm going to focus on that particular scenario. You've got a double bottom forming here at the moment. All I need to see, the best thing I could see here would be price to come back above the monthly pivot, then retest it, or just give me a higher low. That's all I need to see. As soon as I see that, I've got an opportunity for this to go from here all the way up to there and beyond, right up to that resistance level. So, was I actually talking about this? No, I got sidetracked. Kiwi at the moment versus the dollar is showing us a a bullish game changer bar. Does it agree with, that's where I was. Does it agree with the big boss? As I said, you could twist that to look a little bit yes. But the further you go back, right? Is this really the big boss? Are we really in a downtrend? Yes, we are, no question, but we've gone into range. I love this double bottom. I don't necessarily like the range to trade the double bottom higher low scenario, but what I do like is on this daily chart. The fact that we have now come back or looking to come back above this area. And if we do, I'll look for that higher low and away we'll go. Does that mean I'm going to trade it now? Look, I could. I certainly could. I would have to think a little bit further about that. I've only just noticed it, to be honest, because I was a little bit rushed this morning and skipped over it. Game changer plus to the upside. So if I traded it, I'd get my entry above the first game changer bar, right? Or sorry, the only game changer bar, which is this one. So enter here, stop loss down here. What's the better way to trade that is what I'm asking myself. And the answer is, as I said before, let this break out of here, come back and give me the higher low, then away I go. Still put my stop loss here, but I get a better entry, right? That would be the idea. Am I going to be too late if this does break out? I don't think so. It shouldn't. I'm not saying it won't, I'm saying it shouldn't. But sometimes they do exactly that, and I miss out. So risk reward, yes, enter there. Yes, put your stop loss well below there, below the double bottom, right? You want it below this one. And then, and then go in at very, very small risk because this may not work in the first instance. Okay. There you go. That's kind of where I'm at as far as my bias for the week is concerned. But wait, there's more. Let me go back to the minute charts. There's a couple of other things that I do that may interest you. Did we miss this one? Yes, we did. Goodness me, time goes fast. My apologies. We hit the red line. We closed above the black line. Oh no, we put in a new low. That's why. Right, I didn't miss it. But this is worth noting, guys, and this is I'm working on this as well. When you do get a reversal bar like that, which actually took out the low, I like this to be the low. This one did the same thing. I like this to be the low. The one that hits the red line needs to be the low. But I have noticed in recent research into this, back testing, if you like, and forward testing, that when we get a little wick underneath here, and here's another one underneath here, and here's another one underneath here, this is giving me a very, very strong indication that this will, in fact, go where I anticipated it might after it hit this red line. Now, I'm not currently trading that, right? But the more I look at it, the more I see. And guess what this area is here? This is an area of liquidity because you've got people entering the market here short. And if you're a buyer here, shorts mean liquidity. And you can grab this here. If you've got stop losses in the market here, you're going to pick them up as well. So if you're long and you've got a stop loss here, guess what that is? Sell order. That's what you want. You want to pick those up. So would this one have worked? I'll go through the take profit parameters with you now. So you've got the test. Let's say we introduce the new rule that says this candle's okay. We can still go with close above twice. Here's our first close above the black. Here's our second close above the black. So we would enter there. You'd actually enter at market because you've got no time to do anything else. So you just go, okay, buy at market as soon as the candle closes. So you'd probably be in, whoa, get back here. So you're in there. Spreads will probably take care of a bit of that. But then you go, stop loss would originally have been underneath that candle, but you would move it now to underneath the swing, right? Which is what this is supposed to be. This was supposed to produce a swing. It didn't. And it got those couple of tails, three tails, which is then telling me that this is a liquidity grab and they're going to go long. So here's your risk. Entry there, stop loss there is 2.7, right? $2.70 or 27 cents, in fact. Is that right? No, 2.7 cents. 1.2. Oh, this is blooming pound. I thought it was gold. So you've got 2.7 pips. Now, the first take profit here, the way I worked it out, is 3/4 to 1. So you're going to take off 3/4 at 3/4 to 1. So 1 is 2.7. 3/4 of 2.7, guys, is what? 2.1. Let's go with 2.1. So there's your first take profit at 2.1, which you've now been through. 2.1's there. I'll put that line in. Whoops. Don't want that one. I want that one. So there's your first take profit at 0.75 to 1. At that time, you've closed half of the position and you've moved your stop loss to entry. You then have a target of 2 to 1, which in this case is 5.4. There's my caliper. So 5.4 from there, you've just hit it. You're out. So there's your scalp. Over and out, done. I wouldn't recommend that you conduct a webinar whilst you're trying to trade these 1-minute charts. You need to be focused, right? So you've got to enter at the market as soon as the candle closes. You've got to know where your stop loss is going to be, and therefore you've got to know where your first take profit is and your target. What we're working on also outside the target of 2 to 1 is noticed recently that 2 of the trades, one netted a 20x, right? The other one delivered a 19x. So is that worth trying to catch? And how often does that happen? Well, if it happens once in 50 times, I want to be there. You're going to make money on that. So I'm trying to work out another method of holding that position for as long as possible. That will be a trail at this stage. I can't see any other way around that. And it'll probably be a trail on the swings. So, after you've got your TP1, which was here, your stops at entry after that anyway. So it wouldn't work here. But say you got another swing here, you could then move your stop loss up to here. Then if you got another swing, you could just follow the swings. That's one method, and that's kind of where I'm at with it at the moment. So very much a work in progress, but really encouraged by the way we're dealing with this so far, and it is producing decent results. Now, when is for me London Open only, and for maybe now, because that's all the time I've got to do it. Love to know if anybody else has been trading this since you were introduced to it, and if so, what time of day you're doing it and what sort of results you're getting from it. So keep that in the back of your mind if you are trading it. Love to know right now, but if not, then practice for a week or so, and let me know next Monday how you're doing, which will, of course, will be the last show, given that it will be 1 week out from Christmas. Wow, is that really right? Yes, it is. Okay, so that is cable. Where is gold? Has it disappeared? There it is. That was the only scenario on gold which wouldn't have worked and it wouldn't have triggered. The one we've just been through was the pound, and we await for another setup. Guys, that's kind of all I've got for you today. We're 10 minutes out from the top of the hour. I would be more than happy to answer any questions you've got around anything that I've discussed or anything at all that you think I might be able to answer for you. Happy for that. Otherwise, I'll give it a couple of minutes and vamuski and begin my evening. It doesn't look terribly volatile, I've got to say, which is not what you want. You really want a volatile session so that price is going, up, down, up, down, up, down. That's exactly what these are all about. That said, the one that did set up that we chose not to trade under the current rules, because I was talking anyway. Cleon, yes, okay, I'll give you that, no problem. That could go, who knows? So yeah, that may be a new rule coming in. I'm pretty sure it's doing okay. Righto, so the settings for the Bollinger Bands, I'll take them off and set them up for you. Okay, so let's go with insert. I assume because you're talking settings, you know how to do this. Indicators, trend, Bollinger Bands. So you got that? Indicators, this is on MT4, of course. Trend, Bollinger Bands. Okay, the default is for 20 period, standard deviation or deviation of 2, and you want to color, well, you color that whatever you like, but as long as it's different to the other one, then fine. I've got that set at black, and I think it's on the second one. I'll put it on the second one. So second thickness, it's a full line, and that's all I need. So 20 periods, 2 standard deviations. Okay. You can get rid of that center line on, certainly on TradingView you can, but I can't on MT4, I don't think. It just doesn't disappear, so it's stuck there. Then you go again, insert, indicators, trend, Bollinger Bands. Opens up the order, stick with the 20 period, but change the deviations to 3. And then change your color, in my case, to red. And there you have it. So you've got your 3 standard deviations with the 20 period, you've got your 2 standard deviations, and they're the 2 that you want. Don't be concerned with the center one. Well, that said, I haven't worked out a sequence where the center one is doing anything for me, but certainly the 3 and the 2 are the ones that I'm concentrating on. Everybody got that? And for those of you who entered late on YouTube, what I'm looking for is price to touch the red 3 deviation Bollinger Band and then have 2 candles after that close above the 2 standard deviation, which is the black, right? So it hits the red, closes twice above the black. In this case, there's your first close, there's your second close above the black. So you would enter above that line there. In this case, that didn't trigger. Wait 3 or 4 candles and close it because you've got no idea what's going to happen next. After that, momentum has changed. Had you held on, you would have now been entered into that, but it'd be an awful, awful position to be in. I wouldn't like to be in that, given that we've been down here. Doesn't make any sense. Any more questions, guys? When you say hit the red, does it matter if it is a bounce or a body cross? The ideal, Eileen, from my research so far, is that that's pretty cool. So is that. So a little tail on there is great. I've seen candles like this over the time sitting on the line, and that's fine as well. What I don't like to see is something massive like that. If it did have say if you got a decent tail on it, so a reversal bar if you like, is fine if it's small. If it's huge, that kind of size on a minute chart, I don't like that because your stop loss is going to be massive if that's the case, which means your target is going to be large or larger than I would like. So the scalping is far, far better off when you've got a small stop loss because you take profit, obviously, is small as well in terms of ticks, I'll say, not pips. Does that make sense? And are you happy with that? That's kind of where I'm at with it. Don't really like to see those big bars. It doesn't matter if it crosses the line, no. I mean, it doesn't, you don't want it to close down here either. You want you want to have some sort of semblance that it's actually going to bounce. But you really want that to be the swing. Or, as I say, a couple of wicks underneath, no drama. But you don't want something to, close down here either. Is that okay? I'm guessing okay. Yep. Cool. My pleasure. Anything else, guys, before I head off? A little bit of movement coming in. You're welcome, Cleon. A little bit of movement coming in, but no boundaries hit at this point. Hi, Gwen. You're most welcome. Most welcome indeed. Right, guys, I'm going to call it there, and I will see you next Monday, I hope, which is our last show. And have a great week ahead. Hope hope this session has given you something to think about. Have a great week, guys. Cheers, Gary. All the best. Bye bye for now.